Welcome to the Fear and Greed Business Interview. I'm Sean Aylmer. Donald Trump's inauguration saw a who's who of tech billionaires and business leaders surrounding the president as he was sworn in. Tesla's Elon Musk was there, of course, along with Meta founder Mark Zuckerberg and Amazon's Jeff Bezos. Google founder Sergey Brin was also in attendance, with Sundar Pichai, the current CEO of Google's parent company Alphabet, also there. Add in Apple CEO Tim Cook, Bernard Arnault, the French founder and CEO of LVMH, the world's biggest luxury goods company. You've got a handful of very influential and very wealthy people. What will their proximity to the new president actually mean for their companies? Remember, this is general information only. You should seek professional advice before making investment decisions. Josh Gilbert is a market analyst at social investment network eToro. Josh, welcome back to Fear and Greed.
Thanks for having me back, Sean. Great to be here.
Quite the lineup, wasn't it, this week with Donald Trump and friends? Not a huge amount of community representatives, but plenty of business leaders, CEOs. Let's start with Elon Musk. What does it mean for Elon Musk? Keeping in mind, of course, that Donald Trump actually rescinded some of the orders of Joe Biden to make sure people were buying EVs. So it's not all good news for Elon Musk.
No, not always going Elon's way. But as you say, Sean, it was really interesting to see so many billionaires in the room. And I think it's a great example of just that sort of power shift, really, in US politics, right? This sort of club that the president has sort of got, he didn't sort of really have last time out. They've sort of embraced Trump and, standing in the same room. And that sort of really wasn't the case last time out. And I think that is because of these CEOs. They have a lot to gain, right? He is going to be the country leader. So everything from antitrust policy to sort of deregulation. So they've all got a lot to gain or to lose, at the same time. For Tesla shares, as you mentioned, they have been on the back foot a little bit this week following that move, as you say, coming from Trump. But I think we always expected to see that. We always expected to see that from Trump. And clearly it's not something that's worrying Elon Musk, hence his close relationship with him. And I think it's also really worth noting as well that in his last presidential term, Tesla was actually the biggest winner of the Magnificent Seven. Shares were up 1,600%. And under Biden, someone who is seen as much more pro-renewable energy, drove these EV initiatives, shares were up just sort of 50%. Look, of course, Tesla was on a very, very different growth trajectory at both of these times. But it does show that in most cases, trying to sort of front run policy as an investor can be pretty challenging, and it doesn't always pay off. Markets primarily trade on fundamentals, not politics. And I think in terms of what it means for Tesla, we talk about them as an EV maker. I think it's more than that now. I think this is more of an autonomous story. It's an AI story there for Tesla. And I think that's going to be really, really big under Trump. Of course, there is going to be this sort of anti-EV focus around emissions that's going to be, when Trump is in the White House. But I think for investors, there may be a shift now to a focus on AI innovation, that autonomous technology that Tesla has over the coming years. And I think that will be a very, very favorable tailwind for Tesla moving forward. Of course, we may see some weakness in the EV market, but how much more weakness are we really going to see? That's sort of yet to be seen. But I think we may then see that balanced out by what we might see from AI and the sort of the autonomous part of the business.
Okay, another person who was front and center was Mark Zuckerberg, Facebook founder, CEO of Meta nowadays, which of course owns Facebook among others. What do you think, if any, will be the benefit of Donald Trump to some of those sort of social media, very communication-based platforms?
Yeah, well, it's actually interesting. Meta or Zuckerberg and Trump actually haven't always had the best relationship. Trump's previously called Facebook a bit of an enemy of the people. And I think Zuckerberg's really tried his hardest over sort of recent months and the last year to sort of really try and bring that relationship a little bit closer. They've had a pretty decent year, in general, advertising revenues have been pretty strong. I think where the relationship can really grow with Zuckerberg and Trump is sort of that help on censorship that we're seeing globally. I think particularly that's happening here in Australia. We saw sort of the move at the back end of the year to sort of bring in that ban for under 16s, I think it was, using social media. So I think that is a big part. Again, he is the most influential person in the world right now, Donald Trump. So having him being able to sort of dictate policy is going to be really important for Zuckerberg. And I think also sort of avoiding regulatory battles is going to be a top priority for Facebook and Zuckerberg, but as well as all of these other CEOs at the same time.
Do you get a sense that Donald Trump will make a difference in that area? I mean, we'll have a new boss of the SEC, the Securities and Exchange Commission, that presumably has an effect, but it's kind of hard to see how Donald Trump, the person, can make that much of a difference, but maybe he can.
Yeah, I think, like you said, we've already seen pretty sweeping changes. Already come in with some pretty big executive orders. We've sort of seen the SEC chair Gary Gensler removed at the sort of same time. Sort of seeing a new SEC chair at the moment, or a temporary chair sort of coming in. I think it's Mark Ueda, his name was. He was someone that's actually a little bit more favorable to sort of crypto assets, digital assets at the same time. And he's also someone that sort of worked to try and ease regulatory burdens on companies at the same time as well. So it's not just about Donald Trump, the man, it's about his influence on, the DOJ, the SEC, these, parts of the government that I think are going to be really important for these CEOs.
Josh, we'll be back in a moment. I'm speaking to Josh Gilbert from eToro. So Google and parent company Alphabet were represented by founder Sergey Brin, current CEO Sundar Pichai. How do you think Alphabet will fare under Trump?
Look, Alphabet's actually a pretty interesting one for me. It's actually one of the cheapest Magnificent Seven stocks by valuation. Had a pretty decent year last year as well, but they're spending a lot of money on AI, and that's sort of been eating into their cash flow. And I think that sort of held them back a little bit. And one of the reasons that we're sort of seeing the stock trade at its current valuation. And really under Trump, I think it could be twofold, because he's again had a differing relationship in the past with Google. Actually, in the lead up in his campaign, he was talking about them having sort of too much power, that he didn't like that about them. But also at the same time, since then, he's sort of come out and been a little bit more supportive. I think where Google can benefit from Trump is coming from that sort of deregulation, similar to that of Meta, because the current call at the moment, this current case that we have going on for Alphabet is to sort of break them up, right? They have too much power. I'm just not sure that will happen under Trump, because again, that may then give an upper hand to sort of Chinese tech, for example, at the same time. And that's obviously something that Trump doesn't want to do. I don't think we'll see the antitrust cases go away anytime soon. I think we'll probably see something like a fine rather than a breakup happening here. And that is, of course, good for Alphabet. So I think positive that Trump is in for them. But again, if they don't play by the rules, he is someone that can come down on them pretty hard if he wants to at the same time.
We're going through a laundry list here. Tim Cook was there, CEO of Apple. That's sort of a different style of technology company to everything we've discussed so far. What do you think Donald Trump means for Apple?
Yeah, well, Tim Cook and Donald Trump have actually had a pretty strong relationship over previous years. When Trump was in office in 2017 to 2021, Tim Cook was bit of a permanent fixture, if you like, at the White House. He was there pretty frequently with the president. He hasn't had that same relationship really under Joe Biden. I think the biggest thing here that I think we look at on the surface for investors is that sort of heavy reliance on China. Apple is obviously going to remain pretty vulnerable to those tariffs that, Trump has sort of talked about bringing in. Not only does China make up a significant part of Apple's revenue, it also makes the vast majority of its products in China as well. We're already seeing China's revenues decline for Apple already, and tariffs could mean that it falls a little bit further as well. And I'll come back to that sort of relationship that I mentioned there with Biden. Apple was actually sued by the Justice Department, again, antitrust case that could, again, drag on for years. And again, mounting regulatory scrutiny there, that is pretty big for them. And they also had some other disputes as well over watches and things like this. So I think Tim Cook having that relationship back with Donald Trump, I think it may be, working with that administration to, basically benefit, Apple and Tim Cook's interests a little bit more. So I think for Apple, they may sort of struggle a little bit to sort of start the year. Second half of the year might be a little bit more bright. And I think someone like Tim Cook is going to argue that, if you sort of tax the iPhone, if you tax Apple products, that could only help, non-American rivals, right? Again, coming back to that sort of China argument at the same time. So I think for me, Apple is seeing some weakness. They are struggling. We've got to remember services. It's a very, very key part of the business. Double-digit growth, very high margins. And they're also set to sort of roll out AI in the back end of this year into China, which I think will be very, very important. They've got the strongest and the biggest consumer installed base in the world. And I think that sort of stands them in pretty good stead. But he's got a great relationship with Trump, and I think that will fare them pretty well.
And finally, just very briefly, Jensen Huang wasn't there. That's the boss of NVIDIA. Apparently, he was in China at the time. Another company which relies on China, like Apple relies on China. And so kind of mixed messages out of Trump about whether it's a good or a bad thing.
Yeah, absolutely. And I think that's the biggest thing because tariffs could affect them. They rely heavily on overseas sales and they obviously outsource a lot of their manufacturing overseas as well. So very, very similar to that of Apple. And China is also the biggest market for semiconductors. So they're a very, very similar boat here to Apple. But I think the other side of that as well, the more positive element for NVIDIA is that obviously he sort of just rolled out this huge $1 billion AI infrastructure plan at the same time. And clearly that is great news for NVIDIA. They are by far the out and out leader when it comes to AI chips and any sort of technology related to sort of data centers. Something of this scale, when we're talking about what they've looked at, just briefly looking into it within the past few days, it's going to require an absolute mountain of sort of GPUs and related tech, which is only going to go straight to what is, in my opinion, the best in the business, and that's NVIDIA. That can, of course, change. They may use another partner. Someone else may benefit, maybe an AMD, maybe an Intel. I don't see that happening, really. It's hard to see them going elsewhere. And I think broadly, we're likely to get more positive policies, as I say, easier regulation on AI. We've already seen Trump sort of dial back some of the regulatory scrutiny on AI already, some of the policies that have been in place on AI, which I think bottom line is just good news for NVIDIA.
Do you reckon at some point we're going to get a Trump hangover? I mean, business always says the thing that they hate most of all is uncertainty. And there is enormous uncertainty out there at the moment. And we're all kind of looking on the bright side of what could happen. But ultimately, uncertainty can bite businesses on the backside. Do you think we will get some sort of hit at some point in the future?
Yeah, look, I think for the time being, we're sort of looking to the positives, right? We're looking to the positives of this being great for AI, it being great for crypto assets. You know, these are all the assets that have done very, very well over the last sort of couple of years. You know, we've had double-digit gains, 20% gains back to back from the S&P 500. We've had Bitcoin hitting a new record high, you know, in sort of recent months. So there is absolutely this hangover that sort of could come. And I think the biggest worry that I think maybe investors need to sort of think about is this potential that we might see inflation sort of really rear its head again in the US. You know, I think one of the bold predictions that sort of we have at eToro for this year is that we might not actually get a rate cut from, you know, the Fed this year, particularly if inflation does start to sort of pick up again. And that is something that could put markets on the back foot a little bit. And, you know, there is even a question mark that we might even get another hike at the same time. And that would sort of not be good news for tech and ultimately consumers at the same time. And consumers are the ones that are buying these products. And also for those businesses that are spending billions and billions of dollars on AI, right? Microsoft, Amazon, Alphabet, their capex is only rising. And if rates continue to stay pretty high, then, you know, that becomes pretty difficult for them to keep sort of warranting the spending. We saw that, you know, in 2021, when markets slowed down, things didn't go their way, huge cost cutting, you know, people lost jobs, you know, share prices sort of really did, you know, see a lot of weakness. So there is absolutely the ability for that. And I think that's something that investors sort of need to sort of have in the back of their mind. And it's a great reason to sort of, you know, stay diversified and as I say, try and focus in on those fundamentals.
Josh, thank you for talking to Fear and Greed.
Thanks, Sean.
That was Josh Gilbert, market analyst at social investment network eToro. This is the Fear and Greed business interview. Remember, this is general information only, and you should always seek professional advice before making investment decisions. Join us every morning for the full episode of Fear and Greed, daily business news for people who make their own decisions. I'm Sean Aylmer. Enjoy your day.